What did I say? 293.5. That's a low, and that was at breakfast. A lot of water though, so I drank a lot yesterday.
Welcome. It's 10 a.m. on the East Coast. Come on, get out of here. Okay, let's get our link out to Twitter. We're going to continue on the real estate brokerage financial model. We're going to continue on the real estate brokerage financial model. Live financial modeling and RE brokerage, part 4. Okay, and so this real estate model we're going to work on today and that we've been working on the past 3 days will be included in the real estate bundle for 310, and note that's lifetime access for the one-time purchase, meaning you get any additional templates I ever add to this So you can come back for refreshes every 3 or 6 months or whatever, and no extra charge. Alrighty, and you can buy all the templates on my site for $9.99, and I've got hundreds here, all kind of different industries, very advanced logic, um, and I built all these based on stuff I learned on Upwork over the course of 400 plus jobs, and there's just a lot of nice stuff here you can learn, tinker. Okay, let's get back to this analytics, and we'll start on the model here. So yesterday we left off getting down to EBITDA, which was great. We got all the way down. We got all our expenses in. We're in EBITDA, and then now I want to get into cash flow. But to do the further items, I need to start importing all the general summary tabs and schedules. So we're gonna have a whole bunch of import here. These revenue and cost assumption tabs need to stay at the front though. But let's import, import, import. And I got a cool trick if you weren't watching the first 7 months of the year on how to make these integrations easier with logic from other spreadsheets. It's actually a couple specific things you got to do, like making the words, you can't have one word tabs in titles for tabs of sheets that you're importing to. So when I go and make these, so we got debt schedule, we have CapEx with a space, we'll have cap table, we'll have terminal value, monthly detail, I don't think I need an annual detail validation. It has to have a one after it. We will have distributions, executive summary, and these are just high level reports. Discounted cash flow analysis will be on this one. All right. And so we need a 10-year model to use, just a basic generic one, nothing fancy with the CapEx or inventory or anything. So let's see, what's a good 10-year one? Let's see, I don't know if the plumbing business one was, oh wait, nice, this was 10 years. Perfect. So we can use this. We won't use the inventory, but that's fine. We just don't reference it. CapEx is good. Yeah, all this is great. Okay, cool. So let's import. Looks like I already did an import on this earlier. So that's fine. All right, let's start with that schedule. And what I'm doing here is basically importing all the logic from that's just going to fit around the template. That doesn't have to be really unique to the business, or it's not in this case, but it's relevant to have all this in here. And then once we're done, we'll do a find and replace on all of the references to the other workbook and replace them with blank. And then that should be our integration, so we don't have to manually do all the formulas for these summaries. So we did that. Startup costs. We'll do the formatting later. CapEx, probably not going to be used much for brokerage firm, but it might. Just a generic CapEx schedule will be useful, or could be useful. Cap table, if you're going to borrow money from investors, or not borrow, but if you're going to raise money from investors, or just put your own money in, you can see what that looks like. or if you have a couple of founders. All right, so we did this. Now we do our financial statements. This is really the main benefit to doing this find and replace style import. Because the financial statements are always tricky, so it's nice to work from a template I know is correct with the logic that exists in it, so I don't have to rebuild it all and potentially have more errors doing that. So we'll do balance sheet, monthly, balance sheet annual. Oh, and then income or cash flow statement. So notice how all these tabs down here will match our import source. All of these. Distributions has an S on it. I need to make sure. Okay, good. It's got an S. So I believe I have all the tabs. Let's get all of the logic now. So income statement, monthly. Now so the whole point of doing formal financial statements is they're universal, like the way they're structured is pretty universal among accountants and people who read financial statements. So distilling all the information we have on the monthly detail and executive summary and making it fit into that is very useful for that reason. So you can basically give it to anybody and they know what to look for in the different statements and that kind of makes sense and they can back into other logic as they need to. Okay, balance sheet monthly, balance sheet annual. And I'm really hoping to finish this template today if I can. So we might go a little bit longer today. It might go up to 11:30, maybe even 12 o'clock if it takes that long. But I want to get pretty far. All right, oh, we'll do distributions as well. We even got all our checks in here. That's nice. Okay, I believe we have all the relevant tabs. Now on these, I'm gonna have to actually, I imported this from something else so we can remove this. And then we'll do the find and replace on the rest of the workbook and then we'll start trying to fix stuff. Okay. So I believe the only thing that's tricky is we might need the annual detail tab. Let's just put it in just for the import purpose. And then I believe we have all the tabs. So what we'll do is, let's see, where's this referencing from? We want to replace all references to plumbing business XLSX with a blank. Oh, on the whole workbook. Oh man, we missed. Oh, I know what we missed. Inventory. So now we got to undo this. Undo. So even though we're not using it, I do need to inventory one in here because there are references to it, and we want to get the whole entire find and replace all in one swoop. All right, let's try it again. There we go, 26,000 replacements across the whole workbook. So now all these references, like an income statement, is referencing to the proper places. And we don't need this anymore. All right, now the fun part. We just kind of make everything linked all together. We got a nice valuable spreadsheet here for planning out the startup and operations of a real estate brokerage. The real unique logic and assumption or benefit to this sheet is going to be the revenue assumptions and that layout. It's really nice for scaling purposes and the unit economics of scaling out a brokerage. I also wanted to bring in some of the stats on the monthly detail into the revenue assumption. So as you change various things, you can see what that means on like an average monthly basis in each of the years for um, like the average commission you're paying your brokers, the average commission the brokerage itself is earning. And those things are going to be important based on all these different assumptions and deal growth. Okay, so yeah, income statement. So we're going to format all of these tabs so they look nice and neat. Inventory tab we can delete. Annual detail tab we can delete for now. I believe I may want to duplicate the monthly detail. No, actually, I'm going to finish the whole monthly detail before we get into the annual. Okay, so this is good. Balance sheet. Freeze this, drag this over. We don't need inventory. Now, it does look quick what I'm doing, but all this logic I've already built, which is in most of the other templates I have on the site. Because I spent 7 months integrating all of the different three-statement logic into all the different models. If I didn't have that, I would have to manually do all of this. And if you remember the first couple integrations I did, I was doing that because I didn't have the knowledge of how to do the find and replace that in a way that made it fast. And it takes time, even if you're just using a reference workbook of what needs to happen and you're manually doing all the connections on the three-statement modeling. It's hard. So this is really useful to have these templates to work from. And there's all different types. I've got some 5 years, some 10 years, some with a lot of capex, some with inventory, some with like on the enterprise SaaS, it's got deferred revenue logic in the three-statement modeling. So a lot of unique situations that had to be built and integrated in the three-statement model for all kinds of different businesses. So just a lot of value there. And we're going to keep adding on to it. Now for this, I don't really think it's too even if you're scaling up, I am probably going to do the cash flow analysis where you're taking the minimum equity required and having that be your investment up front. I'm not going to do it monthly because it's not like you're going to be doing construction or anything like that. It's most cases of RE brokerages, you're going to be paying some rent, you might have some startup costs, but you're not going to have potentially 12 to 18 months of negative cash flows, um, or even big capex stuff that happens later in year 2, 3, or 4. So this makes sense to have like a one-time big cash injection, and then you grow from there, and you can always reinvest profits, and it'll show in the cash balance if you have some big items that you're buying, which really I don't even know in a real estate brokerage besides like office space, there's not a whole lot you'd be spending money on that's irrelevant to the business. Let's freeze that. We got a format here. Now all of these columns are going to need data validation on whatever date range or launch year is defined. That will adjust this. Okay, all the rest of this is fine. Cap table, we want to freeze, remove grid lines. Executive summary. This will be date D3. Now the executive summary is nice because you can see everything like earnings, operational income, and cash flow and everything all in one spot, which is one of the only places, I believe it's actually the only place that's possible here. Okay, this can just reference that. Okay, so we got all of these formatted. Formatted. That's good. Let's give this a date drop down. All right, and then end month, we want that to be a selection. And then the rest of these will fill in once we have the cap table filled in. 33, 34. Hopefully those are the right. Nope. It might be beneficial. So why is this different? Ah, we have sales proceeds and stuff from the hotel. Okay, so I actually don't want to use this format. I want to use the plumbing business one. I think that fits better. So let's override the global control with this format. Since we know these references all fit into what we just imported. Yeah, that's better. And then again, we could go find replace really quick to get rid of all of the references to the other workbook. Oh, annual detail we do have. That's fine. That's fine. Okay, we got them all. So now all the, because there's some things here like this position needs to be in this right spot. These tax rates need to be in the right spot so I don't have to go and adjust what's going on in here. All right, well, so I think we're pretty good on the formatting. We got the monthly detail done. Next here we'll have other cash items, flow items, and then we'll have capex, taxes, startup costs, um, debt proceeds. What else? Oh, debt service, principal and interest. And we'll want total debt service so we can figure out the debt service coverage ratio. And let's make this black with white. All right. Now is that, oh, and then we also want in here exit proceeds if applicable. And I believe that's everything. Yep. Okay. And then we'll have final cash flow down here. Which will simply be EBITDA, and then these are all going to come through as a plus or a minus, depending on if they are a plus or a minus, so we can add up all of this. Okay, and good. And we'll fill this in, and that's how we'll get our minimum equity requirement when we figure out the minimum cash position after all these things are taken into account. Now that that's done, I can copy this into an annual detail, and we'll fill that out in a minute. But let's actually get into our financial statements now. So income statement, we have, let's look at our monthly detail. For revenue, we have two deal types, and we have commissions from both types. Now, what I want to do is I'm going to show total broker, total brokerage. No, how do we want to do this? Total commissions. And then as a contra revenue item, we're going to do agent share, and then this will be net revenue. And then we'll go here. It's going to be not cost of goods sold, but variable costs. It's not going to be inventory. It's going to be, well, we have it labeled with the labels total variable costs, contribution margin, and then percentage. And before I forget, let's copy this into the annual. Okay, so we want to put total commissions up here. This is going to be all the commissions earned from the brokerage from all activities. So it's sell side, buy side for both types, sell side, buy side, and then we have the amount you got to pay the agents, which will be a negative, and we go negative here minus this, minus this, and wait, did I miss one? One, two. Wait, E22, and this 32, and here. Okay. Oh, also, we're going to reformat all of this. So let's just do that now. I want to select all these, and we're going to do a little bit of a different format. Let's get all this selected. Okay, we'll have to update the percentage rows, but that's fine. Now, we're going to change these all to this format. No dollar sign. However, we do want decimals. So we'll do that there. Okay, now we can drag her over. And we'll check this against the monthly detail, make sure we did all the right references. So net revenue, I've got 185.3 to 187. 18532 187. Okay, so that matches 18,532. 18,532 187. Okay. Now variable costs, we have a bunch of different things for each agent per month. And so we'll just add these up. They're all based on agent count. So on this income statement, we can say cost per agents per month marketing, other. Doesn't have to be marketing, it could be anything, deal or transaction software, what have you, that you're paying for per agent. So that is going to be referencing the total variable cost. Okay, perfect. Okay, let's put that in the annual. Slow and steady here. We're not rushing anything. Oh, I want to relabel this. This is going to be RE Brokerage. All right, I believe. Oh, yeah, update this. So sales and marketing is going to be referencing that. G&A is here. R&D. Now, R&D, again, with a real estate brokerage is probably not going to be relevant, but that's fine. You can relabel that if you need extra slots or just you don't have to use them. You could zero them out. So that's why I'm putting other OpEx here. It might be R&D. It's probably not going to be R&D. It'll be other stuff. But that's fine. We'll get rid of this sheet. Okay, so we're down to EBITDA here. Let's check and make sure that matches. $7,745,000, 7.8. Okay, so we're off a bit. We're missing something. Let's check the contribution margin. 17,189. So that matches fine. All right, so something with our OpEx here. So we've got 155, 198. Oh, it will be off by the startup costs. Right, okay, that's fine. So let's remove this real quick just to do the check. So 9313. And here we got, wait, what? 7876. And 7876. Okay, yeah, so it's just a startup cost. That'll be down here in the monthly detail. Okay, that's good. Interest is fine. Pulling from the debt schedule, and then this looks good. Let's put just a general arbitrary number in here so we can make sure it's working. Perfect. Okay. So that's good for now on the income statement. We'll have other stuff to come back to on this just to check. Now, income statement annual is all good. We just need to drag this down. We need to format all of these. Oh, and don't forget to format the percentages. believe. Oh no, I did the one two decimals there. Okay, looking good. On here, oh wait, I know I had one of these percentages all messed up. This one. All right. Oh, and the EBITDA here. Okay, perfect. I am off on this by quite a bit, so let's figure out what happened here. The annual and monthly should be the same. So that's 10,695,000, and this is 76 million. A little bit different. Let's see, why would that be happening? Ah, because here we need to populate that cost of the agent's commissions. Still out. Oh wait, is this coming through as a negative? No. No, 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 no. This cost per agent. The commission shares up here, so we need to add that in. There we go. Now our check is 0, so that's good. And actually, I like this check to be just a general 2-digit number, so I know, so you can see it better. All right, other than that, I think we're good. As far as the valuation goes of the brokerage, it's probably based on a revenue multiple. So let's just do, or an EBITDA multiple. Let's do a trailing 12-month EBITDA here. That's fine. Uh, okay. Yep. So that's fine. What are we saying on terminal values? Let's say, so 2 million, is that even? Yep, that looks actually right. Okay, let's say the multiple is, let's say 8. Oh, it's because of this. We'll just say it's almost a wash. Whoop. I just want to make sure the tax stuff's coming through here. Okay, there we go. Looking good. Perfect. Okay. Balance sheet is fine for now. Cash flow statement. Let's see. So this is fine. That should not be an issue. We got our CapEx. Got our sale of business and fixed assets. Sale of company stock is the one. Okay, so yeah. All right, so now what we got to do real quick is on the monthly detail, before I get down to the other cash flow items, we have to put a stopper. For example, if I say I want the model to end on some other month, and actually we got to do a validation list on that one as well. So if I want to stop the model at some arbitrary month, we need to be able to select a month, and then the monthly detail should stop on that month. So let's see, what's the highest level? Let's try and stop the deal logic. That might drive most of this. So if our month here is greater than the stop month is just 0 out. So you have that flexibility. All the other logic should be working just fine. Looks good. Perfect. Okay, so that zeroed out everything. How did we get a number here? Okay, so these are two, all right, these are separate. But that's good. So I just had to zero out that one thing and it took the whole entire section out, which is great. I also want to give this a thick bottom all the way across. And make sure, yeah. Okay, so I want to make sure that was working right. So on deal type 2, we'll do the same exact thing. Perfect. Okay. Nice, and then all the variable costs are out, so now we just got to do the fixed expenses, and we'll be all set. Now we're going to lock this if we're going to drag it over and down. I should be able to just do this for the whole section. Perfect. And again, drag it over. Oh, shoot. What happened here? Something happened. Ah, right. I need to lock these two. Forgot. And let's set this as a new copy. There we go. Now this goes down to here, remember, and then the credit card fee stuff is a separate section, so we needed to do this separately. Okay. Perfect. Now, I believe the interest, does this stop automatically here? Yes, but we'll have to do it on this as well. Actually, let's pull, let's see when we're able to pull it right from here. So, what was the first thing? CapEx, taxes, startup costs. Actually, startup costs we're going to put in period 0. And let's format all this as well like we'd like. Okay, so we have here, now debt proceeds will say if, we'll offset it 1 month if this equals debt schedule this date, pull the amount here. Now on this debt schedule, I don't like this format here. Just be consistent. And same with all this. Okay, and then up top we'll just put values in USD. Also, this should all be in Calibri. 11. This can be a little bit bigger. All right, looking good. So back to the monthly details. So we have debt proceeds. Exit proceeds will be sale of business plus that. Now debt service here, the principal payment we want to sum the principal payment here if this date matches our month here. And then interest, I think, is in column C. I believe. Yep, C. So we can drag this down for C. Sum this up. And then we also want to say if we are stopping the model on an early month and not including exit, then these should just zero out. So we'll put that in there. All right, let's drag this all the way over here and we are getting there. All right, looking good. Tax, yep. I believe we got everything. Perfect. Well, let's see. So, minimum cash required will be the minimum cash position 197. 2.1, and that flows through everywhere. Cap table, see there, that pops in here. Let's extend this out for 15 width. And honestly, on these, most people just have these at 100, 0, 0, so I'm going to do that. If you wanted to add them, you can easily by just readjusting anything in yellow if you have preferred A and B. But most people don't. I'm just going to zero them out. So this should be 0 or negative 100%. Okay, perfect. Where else do we go? So balance sheet, up, dang. So this should solve for 0. That means we've got a reference issue somewhere, so we'll figure that out. This looks good. Retain earnings. So we're going to have to check the cash flow statement against the monthly detail to see where we're out. So to do that, we bring in, so this one's going to be here. So cash flow for month 1 is this minus equity. Okay, so we're already out. And then for period 2, we have this amount and that amount. So we are out. 687, what could that be? 687. Looks like Let's look here. Interest, principal. $556 should be close to EBITDA. It is. And then we've got interest, principal, 344, and capex. So the question is, we got a little puzzle here. What are we out? The interest and principal is 344. That looks about right here. Yep, 343.94. Well, what else is there? I mean, there's a $25,000 capex. 24,787. What am I missing? $556 plus or minus 228. Ah, here it is. These are negative. These are negative, and that will be the issue. Okay. Always something. That's why it's good to have sanity checks, because there's always something going wrong. Okay. Now we go in to the balance sheet, and we should see a solve for zero, which we do. That's a very good check there to make sure our monthly detail matches with what's on the financial statement. This is balanced. Great. Okay, cool. So we are really making progress. Let me do the annual detail. We just can copy. Oh, wait. Nope. We got to reset all this. So this is 10 months or 10 years. We got to sum up the monthly into an annual. Now, don't take the monthly and annual lightly. These tabs are very useful in seeing the detailed results of your assumptions. And they show if you want to drive down into a given line item that really help you understand the model. And this is a 10-year annual. Here, 10-year monthly. Okay. So deals per month, that's going to be a sum ifs. If the year matches the year here. So total deals you're completing per year. On deal type 1. Total agents, now this is going to be an index for the end of the year. And all we'll need for the monthly conversion to annual is the sum ifs and the index formulas. So that I want against e date E4, 11, and look up that. So that's the end month of each year, and that can be drug over. This is going to be locked though. Locked. Okay. So we got 41.6. Let's make sure that's the number. I have 40. Oh wait, yeah. Because we don't go to the end of the last year, which is fine. So we end, here's 41.6. That's correct. Now deals per year, we probably don't need a decimal on this one for annual. And agents can have a decimal. Decimals are fine, they're completely fine. All right, so sell side deals. Oh, we didn't lock that. Although this needs to have that other format for all of the, let's see, deals. Oh wait, no, deals is okay, but deal volume, we need this format here. Deal volume, commission, sell side. Yep, all these are added up. And then same exact calculation on this. Okay, so deals per year, total volume, commissions, the buy side share, and then split between the brokerage and agent. Okay. Now I believe we can do the exact same thing on these types. Perfect. Looking good. Total agent count, that's fine. Total commissions. So this is now average yearly earnings per agent. Very important number. These are all aggregate. This is just summing up these variable, and same with the fixed cost. Then we're gonna have this all set. Whoop. Now all that matters on this is the monthly and annual detail just need to have everything in the same cell position. I can just copy and paste all these sum ifs right down the line here. Okay, and then for debt proceeds, if it's in year 0, I can just pull it from that. Otherwise, sum it up. And then this should equal the ending cash here. Out by, oh, startup costs. That's also going to be in the first or period 0. Okay, looking good. That all checked out. Okay. Yep, if the cash here ended, then everything has to be matched up across the board, so that's fine. Let's extend this out to the final year because we know it's working. There we go. Okay. Now that that's done, we can get into distributions. So we want to target the monthly cash flow each period in row 196. So we get that in there. Let's find and replace this. We can do 182 for 196. Drag these over. And some of that should equal the ending balance here. And then this, so remaining equity to use should be total equity here plus the month period 0 cash flow. And then total equity contributed is just the negative value of this, and this is just that. And let's reformat all of these numbers. And we'll put here values in USD. Okay, and the net matches great. Just check the net present value and the IRR, make sure that's all working. Perfect. All right, there's this kind of cash flow analysis. Now the executive summary is a bit different. We have, let's put deal type 1 brokerage net revenue, deal type 2 brokerage revenue, net revenue. So here we're going right to net revenue. We're not going to put in the commissions. This will be variable costs. And we got to reformat all of these numbers. Okay, so tier 1 is this and this. Tier 2 is this and that. Variable costs. G&A. Sales and marketing. And we do have other OpEx or R&D. Okay, total expenses. Let's add in that last one. Now that should match. So 7876. 7876, good. All right. Other cash flow. So add back cost of goods sold, not relevant, not relevant. Whoop. You just clear the contents. CapEx, we have debt service, startup costs, exit proceeds, loan proceeds. We got our debt service coverage ratio. That loan payback we don't have, that's in the amortization. Tax. All right, and And then let's check that off against the cash flow here. Make sure it's all matched up. Looking good. Put all these over to the right. So this and this should equal that up there. Good. To L. Perfect. Just checking the sums here. Okay. Well, this is pretty good. We are done with all the numbers. I want to check one thing. Let's put in real quick if we do have a broker or let's put in the fact that we do have agents, and let's say they're taking a lot of the commissions for these deal type 2. I just want to make sure this still matches. Okay, looking good. Although, wait, what's going on with year 1? Why is that lower? 10. Ah, because this is different. So this is saying of all the deals, 40% are buy side or sell side, the other are buy side. So those have to add up to 100%. Okay, let's check back on that executive summary. I'm trying to figure out why is this net revenue lower for year 1? Because these are 10%. Brokerage is only getting 10%. But it is higher volume, so as it grows, it does outweigh. Let's put in, I just want to make sure these make sense to me. Let's put in these percentages here. Same deal size average, same starting amount. Let's just put in all the same here. Okay, now what do we got? The exact same across the board. Okay, so that's good. That means it's working. Now we can adjust this. Let's say these deals are bigger, but there's less of them and the growth is lower per month. And let's say on these top ones, the brokerage is doing a 50-50 split with the agents. But here they're only getting 10%. Okay. Okay, that makes sense. All right, I'm just checking formatting. So in this case, based on those assumptions, all the revenues actually cover the expenses, so there's no burn. It's just have initial startup costs, and you start making money. Now on the cash flow side, wait a second, we do have CapEx, so what? Oh wait, yeah, this doesn't include selling of or equity. This does, so there's where that is coming from to handle that. Cash flow statements kind of like your uses and sources. You see where the money's coming from, what it's being used for. All right, this is good. I think we're good here. All I really need to do now is visualizations, but the model's done. I'm pretty happy with it. Very, new, unique logic for specifically for a real estate brokerage and all the different ways commission splits can work. Up to two uh, deal types happening. Again, this second deal type could be with no agents and just the partner side, and this could be just representing all of your agents on an average deal basis and expected deals. Or you could have two types of agents and configure it that way too, and that works. Um, yeah, I'm really happy with this. I'm very happy with this. It looks good. Oh, we do need to do sanity checks. Let's do those real quick and check that. And then all that's left from there is visualizations. So maybe I'll do a short stream tomorrow on that, or I might just finish up the visuals off stream. I don't know. Let's see, these are both summing up balance sheet 60. Looks good. Okay, annual detail against monthly cash flow. Here minus that. Okay. Distributions. And then cap table 57 to 59. Let's make sure that's working. Perfect. Now this 921 and 42.5 should match this 920 and 42.5. Perfect. Those IRRs. Let's do some quick tests. So if we do a don't include terminal value, still good. If we end this partial, good. Let's end it a year early. Fingers crossed that this works. Perfect, perfect. And a partial in that year. Okay, good. So that passes all those checks. You wouldn't believe how long it took me to get it to where I can enter anything up here, and these will always zero out. It took a long time to figure that out, or the most elegant way. And mainly, it was putting a slicer in to check if we're including terminal value or not. That was a big reason, or what made it easier to do. All right, yeah, we'll just add a index tab into visuals, and this thing is all set and ready to go. I'll get it published, later this week, and it'll just be a $45 template. It will also be in the real estate bundle. Don't forget, you can get that here, smartly.com. I'll put it in here, and $310 for one-time fee for lifetime access to all those. Remember, you can get all sheets for $9.99 as well, lifetime access to every template I've built across all industries, and there's a lot of cool stuff in here. Alrighty. Well, it only took me an hour and 15 minutes. I'm pretty happy with the time, and I'll probably do the rest off stream, which is just visuals and then the index tab. But you got 99% of the model built live. And I'll see you guys next week with probably starting a brand new